Hold on, I gotta stretch real quick. I'm just playing. What is Gucci? This was yesterday's trade. Currently 2 contracts in this trade. Just because I did I made an impulsive decision. And here I earned a small loss off to the left here. I just tried to buy too early because I didn't wait for the macro. It's just a reoccurring problem. It's so hard to get get your impulses out of it. It's so hard to time it well, but it's not hard in I don't know when it's gonna happen. It's hard as in in basketball when someone goes for a layup and they pump fake and then and then you jump to try to block it, but you obviously miss because it was a pump fake, and then they go and make the hoop. That's what the markets do. But you have to accept the fact that you're not gonna win every single trade. But just because you get stopped out doesn't mean you should abandon your trade idea. That's why I think a good rule would be to attempt a trade idea twice, and if you lose twice, you should stop trading for the whole day, regardless if you got it right or you got it wrong. Because that's when you can try to start making your money back and go on tilt and start making bad decisions. But here, I annotate minor buy side, which is that little that high right under the inefficiency. That was a pretty quick video though. As you can see, it's using these imbalances to deliver premium prices. I don't know, this week I haven't really watched the open. It hasn't been too crazy, nothing too crazy. It's been definitely hasn't been super healthy, but nothing too wild has been going on yet. But I also haven't been trading the day sessions. Oh, actually yesterday was a huge boom in the NASDAQ. So all morning session, it just went up and up and up. It consolidated over lunch, which means it kind of stayed in this holding pattern for 2 hours. And then afternoon, everyone was trying to short the market because of all this gain that took place. But it actually continued to skyrocket, and it was actually a pretty large range day. Which the morning after a large range day, because today is Tuesday morning, New York session, and you're not supposed to trade the New York morning session after a large range day. So that's why I just caught and recorded a trade. And that's it. I'm done for the day. I'm just gonna keep track of it, see what price is doing, and then go from there. I took a partial off there because it took minor buy side. Just something to practice. I don't really care how much I made off of it. I just trying to practice these good habits, and then since I took the partial, I reduced my risk so that even if the trade does turn back on me, I still gained a little bit, not much, but it's whatever. So the targets are just draws and liquidity. I don't demand price to deliver there, even though they usually do. Right now, as a beginner trader, I don't demand perfection for me. I just demand that I stick to my setups and try to get into good, advantageous positions, and let the draw liquidity pull price towards me, and then take profits off where I can, or where the easier, lower hanging fruit is, which is there's buy side liquidity above consequent encroachment. but before that it's gonna hit constant encroachment. So I just put it there because you want to take low, easy hanging fruit. That way you can just get out the trade and go on with your day. These past couple weeks have been, the past 2 weeks since I've been back from the Philippines has been pretty good. Getting a lot of reps, watching a lot of live market, which is like the most important thing for me. Is just watching the candlesticks form, participating in the market, sticking to the rules, because once I start trading with real money, sticking to the rules is going to be the determining factor of my success or failure. But I don't expect to be really successful at this for another 2 years. But that doesn't mean I don't expect myself to make money off this in the next 2 years. I just don't expect to make a lot of money out of this for another 2 years. I mean, you guys have seen like the trades that I do. This isn't random. I see stuff and I can time stuff. I just don't have experience yet. So it's kind of like when doctors go to medical school before they do their residency, like where they're actually like pretty much they're like being a doctor. They're like or shadowing the doctor and like working on live patients. Before that, they're working on like, you know, like dummies or like animals. And so like they've done the study, they have practiced, but they just haven't done enough of it for real yet. That's where I feel like I'm at. But even still, I'm still so infant in like this world of trading. I know such basic things, but basic things that work, and I can just build off that. The more and more I learn about the markets, the more and more I'll be able to predict larger ranged biases, because here I'm just trying to practice capturing 20 to 30 handles, which is still, if you can capture 20 to 30 handles every day, I mean, you can see that if you can make $670 a day, I mean, how much benefit could that bring? But there's just so much more potential than $670 a day. But like as I'm practicing like on myself, not just like the trade execution and stuff. You need to be able to manage your emotions. Like that's the biggest part, really. Because I still feel pretty sour. Like if I lose, I still feel pretty sour. And I'm trying to separate. It's really hard, but you gotta like, oh, there it takes buy-side liquidity. Or it should take buy-side liquidity there. And like these are targets that everyone can see, but not everybody trades this way. And I find it pretty weird. A lot more people probably trade this way now. My teacher's pretty famous as of now. I think here I use the inversion fair value gap. Yeah, like once it closed above that gap, I use that as an entry and just rode the volatility up into a target. That's it. Basic timing, execution. To the next video. Peace.